What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin today at the request of VHK. And VHK had a specific request. He wanted me to pretend like the Bitcoin cycle is already over, as if our all-time high is in already at $108,000, and try to make a case for that and what we might expect if the cycle is truly done, what it could look like if we were to go further down from here, what we could expect. And I just thought that was interesting because it's good to look at the other perspective and accept it sometimes as a reality, right? Even though I personally don't believe we do go lower from here. I do believe we have higher to go. I don't believe 108K was the top for the cycle. Hold on. That's not my personal perspective, but let's play to that other side, right? Because if we know what the other side's looking for, if we know what details would refine this look more to a bearish perspective of the all-time high already being in and the cycle being over, if we know what to look as far as that goes, then the further away from these targets we get, or the more different from this perspective that I'm going to spin, that the price looks over the coming days, weeks, and months, the more that we will obviously know that the cycle's not over and that it's time to move up. So let's try and do this, but this one's for you, VHK. Sorry, I had to clear my throat there. Hit the like button, you guys. Subscribe if you want to see more content like this, and let's go. Okay, hold on. All right, so if we were to make a case for Bitcoin being at its high already, I suppose I would look at some longer term time frames first, right? We look at the 2 month. Maybe we can start off at the 6 month. Let's go at the 6 month, and then we'll wind it down. So the 6 month time frame here for Bitcoin's all existent history. We double click out here and we look at the RSI, and we can see that you do have not just one drive of bearish divergence, but two drives of bearish divergence. That's double bearish divergence, which formed back in the 2017 cycle. Now, generally, bearish divergence would imply that you move all the way back to where the divergence starts, where it started, before you can continue further, right? That's what that would imply. And if that were to be true, if this divergence were to be taken into consideration, it might make sense that if we had a weak bull cycle, sorry guys, if we had the weakest bull cycle that we've ever seen in Bitcoin's history, it might make sense that we could have a very strong bear cycle coming about on this next cycle, right? I just keep clearing my throat, man. That's why I'm muting the mic. I'm sorry. That could make sense, I suppose, right? And that would clear us up as far as where the divergence forms. However, sometimes you don't actually move back down to where the divergence forms. You just make a significant move down, and that's good enough, right? If we look at all of these periods where Bitcoin's had a bear cycle, if we look at all these periods here, from a high to a low, that's a 93% drop there. That's a high to a low, an 86% drop there. This one here, high to low, 84% drop there, and a high to low, 77% drop there. Hold on. You know, if we were to see this divergence come about, that would call for a move down to about 87% of a drop. And that is, I would say, within our expected area of drops. The only thing that wouldn't make sense, or at least that would kind of counter-argue this point, would be that since Bitcoin's come into existence, each bear cycle has gotten smaller, 93, 86, 84, 77. So calling for something that would move down more than what we saw last cycle, I don't suppose that would be expected. But then again, you have double bearish divergence on the 6 month time frame. You have the weakest cycle you've ever seen from a bull market perspective. Maybe it makes sense that you are about to go down. It could. From a high to a low here, you've hit your 1272, which is the minimum expected target of your fib extensions. You do not have to go higher. There is a case to be made that you could go higher. Of course, any price above 108,000, and likely you will see at least 128 to 173K, something like that. But again, we are going from the perspective that this high was already in, so that's kind of the point of this, right? So if this were the high, if that were to be the rejection point, what we would look for, and we can bump it down to a monthly basis here, would be something like this. A nice kind of inverse cross looking candle, right? This is what they call a shooting star. Well, it's not, it doesn't really have the body. It's a, is it a gravestone doji? A very bearish candle. In fact, if we look and we go back in time for Bitcoin, if we can find any of these, here's one. The next month was actually bullish, but then we went lower the preceding month. Here's one, and then also bullish afterwards. That's kind of interesting, isn't it? In Bitcoin's history, these candles have actually promoted growth relatively afterwards. It's kind of funny. That's funny. I don't know. But generally, these kind of candles would promote some downside action. Not only that, you have bearish divergence on your monthly time frame here. So if this month closes red, that would confirm this divergence, and that divergence there would imply a move back down at least to 71K. If we saw a move like that from the high to the low down to 71K, that's about a 34% drop. It's very common with these divergences to go a little bit through where the divergence formed. So seeing something maybe that pulled back to the 100 level, if not the 886 itself, would be to be expected. So that's a 46% drop from here at the most to a potential 36% drop at the most, or at the least. Unless, of course, you take it right from the divergence starting point, which, again, I think it's more common to go a little bit below there, but that'd be a 34% drop at the least. 34% at the least to a 46% at the most, right? Something like that is what we would expect for the next low to come in if this were the cycle top. Now, obviously, after that, we'd probably bounce in this area, the area that we found support at before, the area that we found resistance at before, double top and a long phase of consolidation in the bull market, right? It would make sense we find support here, but what we would likely do if this was the bear market top, we'd likely come up and we would form a lower high and then continue to progress lower. So if we were to move down, first and foremost, we will not move up. We will not close this month above 103.6K, right? We will not close this month above 103.6K. We will not close this month green, and we certainly won't get above $108,000. We have 4 days and 19 hours left. Anything's possible, but a red month would definitely make the case for the downside. If that's the case, we can look forward to 69 to 58K targets. On a weekly perspective, I'm sorry, guys. It's so bad. I don't know why. I have to clear my throat. But I guess I'm glad that it's on this video that I'm not necessarily believing in too much. 1886 rejection down to your 1618. I suppose if you were to bounce off the 1618, you would have done it already, and you haven't. This is a pretty harsh rejection on a weekly basis. That's a nice bearish overbought candle, or engulfing candle. I'm sorry, not overbought, bearish engulfing candle. We did not close below the 1618, so what we would look for on the weekly basis would be in the next 2 days and 19 hours to close below 94.7K. If we do that, the next likely targets would be 87K, 82K. If we make our way down there, it's undeniable we'll probably go down to about 73 to 70K, right? If we can get below 87K. And I suppose the last arbiter of withholding would really be like 82.3K. But I would assume if we break the 1414, we probably would go back down there, because if we look at this relative low here to this relative high, if you break through that 1414, you're breaking through this 236, and almost always when you break through the 236, you go to the 382. If you break through this 382, you're breaking through the 1272, and almost always when you do that, you go down to the 100 to the 886 area. So just bringing that back on the table, but I don't know, things to look for. If you were to go to the downside, again, you would close this week in the next 2 days and 17 hours, or 19 hours, I'm sorry. You'd close this week below 94.7K. If we were to go down, you would also look to close this month red, and you would look to not close this month above 103.6K, okay? Definitely get a red month, regardless though of where you close. I mean, obviously if you close up here, it'd be a green month, but if you get a red month, that'd be bearish divergence, and that would be very compelling for a move down there. 6 month time frame. 4 days, 19 hours left as well. You know, I mean, we don't have a red month here or a red candle here, so the next 6 month candle would have to be red to confirm this bearish divergence. But if this bearish divergence is real and we did kick off the bear cycle, the next 6 month candle would likely be red. That would confirm the divergence, and that'd be good for another candle down, another 6 months down, a full year in the bear cycle as we normally see, right? We normally get 2 red candles in each bear cycle. You can see that, or 3 in this case. So It's possible. It's definitely possible. However, I don't know how likely it is, but this video again was designed to be made with a specific perspective. So I hope you guys enjoyed the video. I hope it all made sense. I was giving you targets to kind of validate what you're looking for and invalidate what you're looking for if you're looking for it to go up. If you close above 103.7K, or was it 0.6K by the end of this month, looking good. If you close this month green, that doesn't mean that it's looking like it doesn't mean that it's looking like we're going to go to new all-time highs if this month closes green, but there's more of a case to be made that the high is already in if this month closes red, which you're only 0.5% away from doing. So that's a lot. That's not that big of a distance in the next 4 days and 19 hours. It could go either way here, but the candle certainly does look bearish at the moment. You look at the daily perspective, I suppose the RSI actually does look bearish. Lower highs and lower lows looks like you'd want to go down. So you probably, in that aspect, we would assume you do. Holding support here a bunch. The next likely area would be down. And again, if you close below this 1618, that could cascade. That could set off a whole chain of events that would lead you down below 74K and even lower. So I got nothing else to say, guys. If you like the video, hit that like button. Subscribe if you want to see more content like this. Thank you all for being here. I'll see you on the next one. Take care. Bye.